afternoon. Well, the expectation was certainly for trading volumes to pick up as it is futures close out today. Run us through the kind of activity you're seeing on the markets.
Hi Alishia, yes it is futures close out today, traditionally always a much busier day, but I must admit that it's certainly not as busy a day as we normally experience on futures close out day. At this stage we've seen over 200,000 Rand of the outstanding contracts have already rolled, so only about 30 to 35,000 contracts expected to expire in the auction or in the futures close out, which started at 12 o'clock and run over 100 iterations until 20 to 2. So certainly a very low number, and we see relatively low volumes considering that it is futures closeout day. I think after the public holiday of yesterday, there's a lot of market participants that seem to have taken a long weekend today and tomorrow, so certainly not as active as we normally experience over a day like today.
While we've got futures closeout today gaining some attention, in the spotlight also will be tomorrow's quarterly index rebalancing. We've heard that two are possibly being removed from the top 40 tomorrow. Let's run through some of the expectations there.
That's right, yes. We have Truworths and Massmart, two of our biggest retailers, joining the top 40 index after the close of market tomorrow. So index tracker funds such as exchange traded funds and index tracker funds have to rebalance tomorrow by buying up the likes of Truworths and Massmart. And the two stocks that they replace are Liberty Holdings and PPC. So those would be sold by the index tracker funds. On the other side of the equation would be the futures players who would typically be long the future and therefore short the physical index. So you might see some selling pressure from there. Now, it's always an interesting sort of tug of war between the futures players or the futures arbitrage players and the index players to see who's the bigger daddy on the day, and to see whether there's more selling or buying pressure in each of those. The fact that we are seeing a relatively quiet futures closeout and that there's such a large number of rollovers would indicate that the futures guys might have a bit of a bigger say tomorrow in that index rebalancing. So although one might expect that the likes of Truworths and Massmart will have some price positive movement tomorrow in the closing auction, I think we might actually find that there's a bit of pressure on them tomorrow because the futures players would actually have to sell those.
Well, of course, with that local activity happening here in South Africa, a lot of our direction being derived from some of the activity on international markets as well. And I was reading a trading note highlighting one trader saying that perhaps we're just in the eye of the storm, but either way he still thinks that there's more to the rally, and we're talking from a global and local perspective here. What's your view?
I certainly think that we're in the eye of the storm. I'm not convinced that there's more to the rally, but I think there's certainly more to the storm. I think we see continuously every day that there's still a lot of positive and negative news that come out. Last night in the US was another case in point where we had very good positive data coming out in terms of industrial production, and at the same time we get negative news out regarding the housing starts that have fallen back sharply in May. And the market's reaction to this is quite predictable. On positive news, it rallies up. On negative news, it pulls back. And it's these contrasting forces that gives us the volatility that we've become so accustomed to over recent weeks and months. And I do expect that this will continue to play out. And unfortunately, here at the southern tip of South Africa, where we see so much other activity at the moment going on, we are unfortunately just at the mercy of what the rest of the world does, very much as Bafana last night ended up being at the mercy of Uruguay.
Yep, I think many of us trying to forget that defeat. Moving on to some of the international developments that the markets do have their eye on. It's that meeting of EU leaders which is underway today. To what extent, though, Nerina, has the market priced in some level of reassurance from the EU members of ability to manage the EU's debt problem and the situation in that zone particularly?
Well, I guess Spain's problems also stretch further than just their debt problems, or further than the soccer field, whichever way you'd like to look at it. But
against Switzerland, who would have thought?
Very much today the focus on the EU summit, where on the one hand Spain is desperately waiting and asking the EU to please release the results of that stress test so that they can actually be shown to be quite resilient to the expected debt problems that they might have. But on the other hand, you have the Moody's ratings agency who have downgraded Greek debt, and as a result, two of the large index providers have actually dropped Greek debt from their indices, their bond indices. And as a result, once again talking about index tracker funds, on the bond side, you find that your large index tracker funds now have to sell their Greek bonds. So these sort of things really do add to a lot of the volatility and the nervousness that we see. We saw that the euro twice over the last couple of days tried to break through the 123 level and was not able to do so. And last night, not surprising to see then that we see some safe haven buying again of the US dollar. So the euro again today weaker against the US dollar. We see the move back into the gold again, and hence the better gold price this morning. And as you mentioned earlier, the good performance of our gold and also our platinum miners.
Yep, but let's take a look at those gold shares and how you're playing those space. Well, miners in general, I mean, you've highlighted it's gold and platinum miners that will derive benefit here, but this in a context where we've got wage negotiations between Eskom and unions now sitting at deadlock, and we know from our experience through the load shedding period just what impact cuts in electricity have on our local miners and their production levels.
Yes, although I do think that we're in a slightly different situation as the previous round of devastating load shedding that we had. A lot of that was brought about by coal supply problems, and this is certainly not a problem at the moment. Also, the previous load shedding came at a time when the reserve levels of Eskom was at desperately low levels. Currently, the reserves are sitting in double-digit territory, and although the poor supporters who were sitting on the train from Pretoria to Johannesburg last night probably will not agree with me, I think the likelihood of load shedding, widespread rolling blackouts, is not nearly as much. So when we look at the threat of the strikes, of course it will have an impact on our mines, but I don't think it will have the impact of us getting to the point of rolling blackouts from Eskom's side. We must also remember that the minute that there is the strike problem at our mines, in particular for the platinum mines, bizarrely enough, the impact that it has is that the platinum price actually rises because South Africa is such a large producer of platinum in the world. So conversely to popular expectation, we might actually find that strikes at Eskom might actually have a positive impact on our platinum companies.
Well, just looking at a specific platinum mining company that has been in company news today, Northam has increased its cost estimates for its Boyson project to 3.6 billion rand, that marking a 16% increase. Market reaction to that news, Nerina?
Well, once again, I think the danger was always that the cost estimate would increase rather than decrease. So it's not entirely a surprise. And I think one also needs to look a little bit beyond the increase on the capex of 16% and to acknowledge that what they're really doing here is short-term pain for the benefit of long-term gain. Because what's heartening to us is to see that what they've been able to do through this is to increase their unit to decrease their unit production cost by around 10% and to increase their production capacity by about 25%. Now that is a very, very good sign to us, and I think that certainly is a lot more positive than the negative impact of the increase in the capex cost. So all in all, I think it's actually not bad that they've been able to absorb the increase in the production cost in such a positive manner. Also, if we look slightly further afield at the management, for example, of the Zondereinde mine within the Northam's group, we certainly have the confidence in management that they would be able to deliver on this promise and that they will actually be able to meet this increased production levels. And we therefore do not take this as a negative news flow from Northams.